What's going on, everybody? So, welcome to the Intro to Technical Thinking with Josh and Kenan. Put a heart in the chat for Josh to show Josh some love, and let's open it right up so that he can tell us what he sees on the charts. Josh, how are you?
Hey, good morning, Kenan. Thank you for putting this together today, and welcome everybody. It's a Saturday morning here for me in the West Coast, 11 a.m. And I'm excited about the content for two reasons. One, we're going to begin to make charting easier, but two, we're actually going to dive into a stock of great interest, which is Enphase. And I want to set this up, Kenan, and I'd love to hear any thoughts that you have on it as well. So I've been saying on my page for a long time, actually ever since Enphase was over $300, I identified that it was going to basically break down. It had gone up parabolic, getting everybody's attention, making a ton of money on the run up, but it's been collapsing and coming down ever since. And here's the bottom line. This is a solar company, and solar is simply too expensive for most people, businesses and residential, when interest rates are this high. It's a hard sell right now, and I have personal account of a lifelong college roommate friend who sells solar and is very successful in this space. And he makes about $500,000 a year, and he lives in a beautiful house, and he's got about $500,000 worth of cars, Kenan.
Mm.
And man, he was hitting me up for some money the other day. I gave him a small personal loan, because even though, and I did say to him before I did it, I was like, man, I mean, why don't you sell one of these cars? Ought to get you through for a while. But and he actually moved from Idaho to California because he's looking for a better place to sell. Now, he's a big solar guy, but I'm telling you guys that solar is tough right now. And it's really only people who have great credit and who have cash who can get into it. And the easy days of low interest rate where solar was booming are behind us. Now, has Enphase and all these other solar companies been punished enough? Have they been beat down enough to consider buying them, or is it still too early? Well, we're going to see what the charts say about it, and that's going to be very interesting. We're basically going to break down how I would start charting this. Now, I have done a little bit of charting on it, but I specifically chose this, Kenan, because I don't have hard eyes on it. I haven't really spent a lot of time looking at the chart. So for me, even though you'll see some things set up on my chart, they're old. They actually have more to do with like two times I've looked at this stock for other people. So let's jump into the charts, Kenan. Or did you want to just respond to the solar environment or anything regarding interest rates?
Nope, I think you hit it right on the head. I say let's jump into the charts.
All right, let's jump into the chart and let me know if you guys can see everything correctly, and if you can hear me correctly, that would be great. Let's let Kenan know in the chat. So, all right, what do we have up top, Kenan? So
So,
right now, everybody's seeing the chart.
yes, everyone can see the chart right now.
Okay, guys, the very first, this is my old charting from really back in November of 2022. I identified that we had a clearly ascending bearish channel. And when we were sitting right around 320, I said, guys, we're going to come up to 340. We're going to hit this. We're going to get rejected. It's going to be the end of the move, and we're going to begin to come down. And that's exactly what happened. And then we came down, and I was expecting some kind of a bounce on the lower end of this support range around $182. And we did get that bounce, but you see that we collapsed through that support line and we entered into a much more bearish zone and much more bearish trend. And we've been slowly bleeding off. Now, another strategic support, and I'm going to get into how to break down these supports and resistance. I'm just sort of recapping Enphase as a stock. We had this pretty long-standing historical support line right around 123 bucks, and so we knew that this was this every single time we got there before, we got an abandoned baby, which is a candle that is under and beneath two other large candles. Now, guys, we're looking at the weekly candle chart, which means that every single candle on this chart is 1 week in the market. So it's the opening price on Monday and the closing price on Friday. It's the highest price during the week, and the lowest price during the week is reflected in each and every candle, right?
Hey,
And so
Josh, quick
go ahead.
question. What is the ticker symbol on this one in case people want to follow at home?
Thank you. ENPH. Edward Nancy Paul Harry. ENPH. Enphase Energy.
Thank you very much.
All right. And so we knew that we had this strategic area right around 120, right? 120, 123. And sure enough, we got down here, we got a consolidation. And just recently, it absolutely now, there's a number of reasons why this had to go down. One, it still wasn't low enough. Two, we were in a pretty bad macro environment. And so it got absolutely taken out as to the, like I like to say, toasted, roasted, taken out to the woodshed and beat down. But now here's my thought. I'm just going to jump ahead, guys. We are definitely at a place where end phase has entered into oversold, and I think that we're at a place where this can bounce. But just to be clear, I will give you the beginning and the end right now. One, yes, we're at a place where this should bounce because it's fallen pretty hard. And yes, the likelihood is that we would back test this 100 level or slightly beneath it, 95 to 100. And so, yes, this could be setting up for a nice little bounce play going into next week. However, we're still in a macro bad environment, and just kind of, I don't know if you can put me back on the screen, Kenan, for just a minute, just so I can make this commentary.
You're up.
All right. So just to be clear, you have to ask yourself this question. So this will begin to move. The market trades typically 6 months in advance. So it trades today what we're going to see happen 6 months from now. It's all forward looking. All right. So let's consider what I just told you guys. So are the interest rate environment going to get better 6 months from now? So here we are at the tail end of October. So we've got November, December, January, February, March, right? April. So will the interest rate environment be potentially better in April? Will we have had some more rate hikes, or will we actually get our first rate cut? Now, if the rate environment is going to be better in April, then this could be bottoming right now in anticipation of a better rate environment. Now, I don't have the answer to that. Okay, so we're talking here. Okay, we're talking and speculating, but those are the right questions to be considering right now with end phase. All right, let's. Any thoughts on that, Kenan?
So, in terms of the rate hike environment, what I'll say is, I don't know if I have a screen where both of us would be up. I think I just have you as the star player here.
Go ahead,
So,
go ahead.
in
Put
terms of
yourself
a
in there. Switch it
rate
over.
hike
People want
environment,
to
if you
see.
guys can see me, I'm down here in the corner. So, I don't see rates being higher. I don't see it happening. I don't see it happening. However, you never, ever, ever want to put all of your eggs in one basket as if it's impossible. The possibility does exist. So you want to be prepared, not surprised. Like I always say, proper preparation prevents poor performance. So you want to ask yourself, what will I be doing if they do decide to raise interest rates? In the off chance that they do, what I'll do is I'll say, you know what? I haven't, and let's just speak hypothetical here. I haven't learned how to do put options yet. I haven't learned how to sell covered calls yet. So maybe I want to be prepared for that in case it happens, right? You want to know how to do it so that when the opportunity presents itself, you can capitalize, right? And I want to think of it like this. So you know how there are some jobs and professions where the barrier to entry is extremely low. So like if you wanted to go to work at McDonald's or you wanted to go to work in retail, like folding clothes in the mall, let's say, they can replace you by just the manager could go outside of the door, yell, hey, anybody else want to do this job? Right? And they can replace you right then and there. But let's say that you had to become a brain surgeon or a certified psychologist, a registered nurse. They can't just yell out of the door and then anyone can replace you. Why? Because you have already acquired the skills to make you the one who can capitalize here. So in this example, what I'm saying is if the opportunity presents itself and someone yells outside, "Hey, does anyone want to be a brain surgeon?" You don't have the qualifications. You can't do it. It doesn't matter if the opportunity is there, if the job is open. Hey, anyone want to be a psychologist? If they're yelling and you're there, you can't do it. You can't capitalize on this situation because you're not qualified yet. So what I want you to do is qualify yourself for when these opportunities presents themselves. So me, Josh, we know we might not anticipate rate hikes, but if they happen, we know what to do. We know that, okay, now it's time for us to look at our cover calls. Now it's time for us to look for things to bottom out so we can get on the wave back up. We're looking at, okay, can we buy put options here? If you don't know how to do these things yet, you have to put in the time. And part of putting in the time is you're already part of the stock squad. Literally mention, hey, at Stocks with Josh, what do you think about this? What do you, or Kenan, what do you think about that? I've been looking into this, but I don't understand what delta is. I don't understand. Ask us those questions so that we can help to cut your learning curve in half. So that's what I'm thinking. I want you guys to just make sure that if it does happen, then you know what to do. Now, if it doesn't happen, then we're very likely to continue seeing rates being higher for longer, right? You could just basically forget about the rate cuts for now. Don't even think about that too much. Eventually, it'll happen, but just let it go for now, especially with the economy booming the way that it has been. So I say all of that to say what I want everyone in the chat to do once Josh is done is to kind of like rapid fire like stocks that you may be in or maybe looking to get in, and we'll do this towards the end. So then I can run the technicals on it. Josh can run the technicals on it. But Josh, what do you want to say?
Well, first of all, that was phenomenal, and I think it was a very, very spot on to what we're talking about. So, to get exact with what you just said, it's appropriate for us to be looking at this stock right now, so that when we see those interest rates potentially shift, or we see the Fed pivot, we know that one of the stocks that could benefit the most from it would be Enphase. And so, let's dive into that chart, Kenan. Let's pull it back up and. Okay, so
You're
we're gonna go from top to bottom on this. The first thing that you guys want to do, first of all, you really can't do this in Robinhood. I don't think you can do this easily in Moomoo. You can't do it in Webull. So you really need an app like Trading View. That's the one I use. It's a free app that
I agree.
it's tricky. It's a little bit hard, but you got to get used to these tools.
And
So
Josh, it's better
yes,
to learn it now than before you when you need it. It's better to learn
you
it
are
now so that you're ready when you need it.
100% right. All right, so I'm going to just get rid of some of my old technicals on this, right? And we're going to start from scratch, as if I had never looked at it before. And the first thing that I want you guys to see is that we are looking at about around a 3-year time frame.
So
And so
Josh,
we're
I'm sorry.
yes,
Do you mind if I prime this so that people can refer back to it? So we're going to start it as if we never looked at it. This is end phase. So Josh, what is the stock? What is the time frame? And what is the ticker? And everybody, we're at 12 minutes. So remember this time frame in the video so you can see how Josh is going to chart it from
okay,
scratch.
so we're looking at three. We're looking at a minimum of 3 years. I'm starting off on a higher time frame. I'm starting off on the weekly candlestick chart, and I'm going to go through some of the basic areas. Right. I want to get what I'd call the all-time high. So we're going to grab a horizontal line and we're going to put it right on the all-time high. I better increase the color of that. Okay, matter of fact, I'll change the color of that too real quick. We'll go yellow. All right, so now we got the all-time high, and now we're going to go to the local low, which we'll go to the previous low. I've got magnet turned on, but we'll go right there. So this is a very, very strategic. Right now we have we got the all-time high, and we want to stick to the last 2 to 3 year low, which we've actually see that we've hit it 2 times. And so we know that that's very significant. Back in the day when this came back and bounced at this same price of around 108, when it bounced there, Kenan, that's what was called a double bottom. And it signified that this particular run up was going to occur. So technically, if you were trading this, you would have actually been kind of afraid, because you would have seen this massive sell-off, which would have been terrifying, and it would have been sitting at a previous support zone. You would have had no idea whether or not this was going to continue, right? You would have been thinking it might continue,
Right.
but when it reversed and we got this essentially abandoned baby candle pattern, then we knew, and a pretty strong momentum candle on the weekly chart, then we knew that this was actually going to go higher. All right, so we've got a couple support lines in here. Now we're going to go to what I'm going to call this is a swing high. Okay, now why is that a swing high? Well, it was a high here. Okay, and it also was a swing high here, and it also came back and became a swing high there. So that's another one of the strategic points that I'm going to identify. We want to go a little further back and look at so right now we're sitting here, and so we have to ourselves, is this a good enough support? And I'm going to tell you, we're going to go back to this previous swing high. So back in the day, Let me just zoom in so people can see it. Back in the day, this was a pretty significant swing high. And it could be argued that this was a swing high, and it could be argued that this was a swing high. So at the moment, when we go into the future, we can see that these are going to be significant areas of support and resistance. Now, if I pull this up right here, right between where we landed and this area of consolidation, you can see that's right around $79. And I'm pretty sure that's essentially the low of this candle was $79. And so we've come all the way down to a previous area that had once been resistance. And it's always the case, Kenan, that what was once resistance in the future can become support. Okay. So for instance, when we had zoomed up to this area, we see that we ran up, we found this area, and we got rejected, right? We went sideways and consolidated. This was 1, 2, 3, 4, about 4 weeks. And then we found support and we took off to a new level, right? But this, at one point when it came up here, it got rejected. And so later on, when it shot up and it made this new all-time high at the time, and it came all the way back down, where did it come back down to? It came back down to the area where it had previously struggled and gotten rejected. And sure enough, it became support in that time frame. All right, let's go and look at a couple other strategic spots I want to mark. I want to mark this as a swing low because it also was a pretty strong area of support and resistance. So now we've got these areas. The next thing that we want to do is we kind of want to adjust them to make sure that we're getting the best possible touches on each one of them. So I kind of like this swing low, but if we raise this one up slightly, we get a little bit of a better spot. We get the top of this candle. Let me just mark everything so you guys can see it. We've got 2 dojis over here that I'm aligned with. Let me take off magnet so it doesn't do that. So I've got a couple dojis I put myself in the center of, okay? And I got myself a touch here in the top of that candle. This would be something that is very debatable, and by experience, some people could argue that it should be here, but pretty much right in this zone, I feel comfortable with. So I'm going to say this. In the future, so let's just take a broad step back and talk about what the price action of this could be. Well, for now, we know that we've come down pretty hard. I guarantee you, if I go over to the RSI, it's going to look extremely oversold right now. And we will do that. And one of the things that we're going to be looking for when we go over to the RSI is, even though the price has come down, we're going to see if the momentum has come down at the same pace. If it hasn't come down at the same pace, that's called bullish divergence. And so we would be asking the question, are we going to get a bounce? And if we get a bounce, how high? Well, right off the bat, another area that we can draw on our map is right here. This is this doji of this previous consolidation zone. This is going to be light support, okay? So what I would do is I'm gonna mark heavy support and light support. The one I just did would be light support, and I'm gonna beef these up and mark them heavy support. Now, I bet there's people who are asking questions like, Josh, how did you know to do that? They have more to do with the significant timeframes versus the less significant timeframes. So the movement from $80 to $110 was a far bigger significant time frame. It made a new high, and 110 is where it got rejected. It pulled back and consolidated at $96, but $96 was the pullback, not the area of resistance. And so that is going to be an area of support. You can see that this candle fell down to it, right? But it kept falling, so it was light support. Now, what that's going to mean is if we get a true reversal right now, we come up here and we get rejected at what used to be light support and failed, and it could turn out to be stronger resistance. It might prove to us that we're going lower. I would suggest to you that if we came back here and got rejected at $96, that it would be telling me that this is going to continue to go to the doghouse. But then if light support gets broken through, let's say it gets tested, we go above it, we come back and bounce, and we move up to heavy support, then I would tell you that we might be dealing with a trend reversal. and we would then be looking for a move to a higher time frame. Let me pause there, Kenan. Let me see if there's any questions you want to review with me, because I feel like I'm going fast.
Nope, I think you're doing just fine. Everybody's in here. They're telling me that they're taking notes in the chat, and what they're
All right.
trying to figure out is, okay, a trend reversal, for example. Does that mean that you would play it towards the upside?
Yes, well, I'm gonna tell you right now, this is interesting enough to me that I've got a lot of plays on right now, and I don't know if I want to focus on another one. I need to manage my Tesla and my Google and my Amazon play right now. Um, but I would say that if I wasn't in big plays, I probably would, and I may even take a small position on this on Monday. I think that it definitely has hit a place where we could bounce. Let's just, for the sake of the conversation about this particular play, let's add the RSI and see what it looks like. Okay. So let's spread things out here. Just so you guys know, if you're using TradingView, the way that you position things is you grab the price range on the right, and that allows you to expand and contract. And you grab the horizontal bar on the bottom of the dates, which allows you to expand and contract the time frame. All right. So what does the RSI say to me? And again, guys, I have not looked
Way
at this.
oversold.
Yeah, it's way oversold, but here's what I don't like about it. Okay. What I would have liked to have seen on the higher time frame is bullish divergence. I don't see any here.
No.
So this is scary because this goes down and the price goes down. All right.
Right.
For kicks and giggles, let's go over and look at Apple stock just so that everybody
So,
can get a
Josh,
sense.
I wanted to just
Yes.
comment on this because you made a great point that I want everyone to think about, and that's you're not trying to be in every single trade. You're not trying
Yep.
to trade every single stock because what people often do is they overtrade, and overtrading looks different for different people. Some people have 20 different stocks that they're trading all of the time. Some people have 20 different open positions and options in one particular stock. But if you can focus on a few and get really good at their price action and movement, that'll help you drastically.
I think that's really good. And one of the next steps that we're going to go to, Kenan, I want to keep everybody kind of on the headspace, same headspace. We're going to take and go from this higher time frame down to a lower time frame, keeping our lines drawn on the higher time frame. People always wonder how I get my calls accurate. If I were to give them a single reason, it's because I take the time to chart from top down or bottom up, however you want to view it, the time frame. So I go in a really high time frame. And to be honest with you, I could easily go to the month. I thought about it before I started here on the weekly. There's a couple things I would have checked on the monthly before even getting into the weekly. But after this, we would go to the daily, and then we would look for support and resistance, and we would have and I would change colors. So I'm using yellow for the weekly, and I might use red for the daily. I'm going to get into that in just a minute. But let's just compare we're also kind of considering this live. Is this a good play for Monday? There's tons of retail out there. I saw some influencer, saying, hard buy, load up for end phase. Off of this initial chart, I'm going to say no. The RSI don't look right to me, but
Mm-hmm.
could be. But let's just go to Apple and see if it's different. And I want you to know, I don't know the answer to oh, look at that. So let's see here. Let's see if we got a bearish chart going here too. All right. Yeah, so I actually, to be honest with you, there is not necessarily bearish divergence in the Apple chart. Let me see on the weekly time frame. Keep in mind that we're looking at a very large time frame. Let's just check Amazon. Yeah, I'm going to say we're not. Okay, so maybe that means that end phase is not doing as bad as I thought. There's really not a lot of bullish divergence in any of the charts right now, obviously because we had some pretty strong oversold conditions. So until we get to the daily time frame, we'll continue to give end phase the benefit of the doubt. So let's jump over to the daily time frame, and then we will let me kind of go through and get some of these things off my chart. All right, I'm going to get rid of this. We're going to give Enphase the benefit of the doubt and keep charting it. All right, so now I'm going to go to the daily time frame. And you can see, interestingly, that the lines that we drew for support and resistance on the weekly, and this is really cool for everybody, at least I like this type of stuff. You can see that they played out perfectly here. So we drew these on the weekly, but look, it came down, broke beneath it, back tested this line that we drew, and then it capitulated down to this support. And so the weekly time frame, you could say, kind of predicted this. When we got this tall wicked candle on the daily time frame for Enphase, this rejection candle, and as soon as we broke beneath the low of the day, which was 94.67, it was a strong signal to get out because this thing collapsed in price. All right, let's kind of continue to see if we have any more adjustments we want to make to our time frame. Give me 1 minute. I'm going to go back. So we're going to say that this 92 is going to be a light. I'm going to change the color of this and make it red, and that's going to symbolize a daily time frame support. And I'm going to throw on a couple more here. I'm going to put this one on, and I'm going to say that this is a daily time frame support and resistance. And I'm going to refer to those as light resistance or hard resistance. All right, let me just kind of look over. All right, so I'm looking at the, I'm going to adjust this slightly to, that's the next phase, guys, is to adjust your time frames. It's sort of like fine tuning them. We're also going to say, I'm having trouble grabbing this. So, wait, it's creating a new support line. Let me drag it. All right, so I'm fine tuning where these go. In my mind, this is going to be more relevant around the $90 mark. I then see, yeah, I'm going to say that they're at 90. Let's see. And I'm going to adjust this weekly one up to around 115. Okay. All right. So this is our game plan. And let me just type these in. So we're going to call this part boring.
And everyone, this is the magic behind the scenes that you don't get to see if you're only on YouTube, where there's a lot of work that goes into doing technical analysis. A lot of it isn't sexy. But when you put the time in and you do that work that isn't sexy, it allows you to make more money. It allows you to win more than you lose because you're willing to put in the time that other people aren't willing to put in. So make sure you're paying close attention so you can really see how these things go. So when you see Josh put together a 20-minute video or a 10-minute video, you see that it took a lot of time to even get that into that kind of a format. And what we're doing here is showing you how it really looks so that you can be more accurate.
All right. Now this is where, okay, I don't know if we're having fun yet, but I'm enjoying it. Okay, so now we have our basic support and resistances drawn. And I'm going to refer to them. You guys understand that I said that, the red ones are daily and they're lighter, and the yellow ones are the weekly, and they're going to be stronger. And so I would expect the stock to interact with these prices. 70. Let me get this right. But um, you've got to trade the larger time frames. So if you're doing scalps, and it so at the moment, in my mind, this has fallen incredibly, and I would say that we're gonna get a bounce to probably $88 before we go down any more. So there's a prediction for me on end phase. So between this 80 to 85 before we continue down. And if it were not to get rejected at 88, and it were to climb to a weekly time frame, then it would suggest that the stock is slightly more bullish than I'm giving it credit for. Based at the moment, I would lean towards a smaller trade between 80 and 88. There's probably plenty of meat on that bone. And I would be watching 88 to take profit, or to enter or to tighten up my stop loss or raise my stop loss. If it got rejected, then again, I would expect this price action movement. So I would expect it to go up to 88, get rejected, come back to 80, probably go back up to around 84, come below down to 70, and then it would have to back test 80. That's that. And you can tell, I mean, if you just look at this, if we consider that this stock is going to be bearish, but for some reason we wanted to trade it, we would have, this isn't a guaranteed win idea. This is what's called a strategy. My strategy would be to enter calls on Monday until it back tested 88. I would then enter, I would watch to see if it fails, right? If it went above, came back beneath quickly, gave us an ugly candle, I would then consider puts back down to 80. I would put my stop loss above $84 at $85, and I would scale my puts at $85 down to 70. And that would be a bearish thesis on this stock. All right, let's just go over a couple more things. Now we're going to do something that's different than what we did a moment ago, and we're going to go back to our higher time frame. Now we could, if I wanted to really get into that stock, I would then go and chart it, Kenan, on the 4 hour, right? But this is not going to be a massive deep dive. I've deep dived Google. I know that chart like the back of my hand. This is not that today. We're going to do a general dive. Now we're going to be looking for some any kind. Let's look for what we're going to call our ascending or descending support lines. And I'm going to start off using a parallel channel, and I'm going to be really just not really think about it too much. I'm going to kind of see where we're at. Now, the last time I successfully called end phase when it was up at the top, I looked at the weekly time frame. People ask me, "Oh, check out end phase." I looked at the weekly time frame. I didn't even do all this support and resistance that I've drawn. I drew a parallel channel. It was so easy to see. Bam, bam, bam. I drew that, right? And the stock was sitting right here, and it had this massive bullish candle, which meant continuation. And I said, yeah, we're going to get up here and we're going to touch 340. That's literally how quickly I made that assessment, and it did that. So we're kind of doing that same thing now on the weekly, and we don't know if we're going to find a pattern. We're just drawing. So let's just see if we find a pattern. So, lo and behold, guys, we've got some decent touches here. So yeah, I would say this is near decent of a channel. So let's just talk about this. So we've moved here, the middle of this larger range got rejected, came back right here, came back up, got rejected, kind of consolidated here, touched here, right? Came back to the middle. Now I can tell you by experience that this looks like a long-term downtrend. Now, if this was going to be a descending bullish pattern, by my years of experience, this is when that was going to be proven. Its failure to come back to the top of the trend pretty much would have told me, if I had been studying it, that this was not going to be a breakout ascending channel. You follow me? That's just personal experience. So that's like 2 seconds of looking this over. This chart was easily predicted when it failed to break over this strategic spot. And let's just look at this, Kenan. When it failed to do what I would have expected it to do, to be a bullish descending channel, what did the market give us? This massive red candle. And so, like I said, I'm looking at this channel, this with fresh eyes. I didn't even notice that massive sell candle. What I noticed is that it failed to get back here, and then I keep looking, and there's that confirmation. So when the market got this massive sell candle down to $161, that was actually pretty strong confirmation that this wasn't going well. But let's just go even further with one of the worst bearish moves on a descending chart that we can get, and that's an ascending channel, because that's really what's happening here. If we stop and look at it, I could draw a bunch of these. You're going to find that when a chart is breaking down, you get these series of ascending channels. There's one there. There's one here. We've come down. And then this will tell you something, because look at this, guys. We're unfolding this now. What are we missing here in recent days? We've had a lot of pullback. We're missing a nice ascending bearish channel. Oh, my goodness. Probably back to 115. Is that beginning to make sense?
It makes a lot of sense. And I'll say this too. This is
Go
why I
ahead.
often tell people don't hold on to options too long. So when we look at this chart, we can see that, man, it looks like just buying a put option would just straight up print.
Yep.
However, in between the dips, there are some rips. So
You
we
would have got
see,
chewed up. You got chewed up right here.
yeah, you would have
You would
really
have,
lost a lot of money to two things. First of all, the rips, if you got into a put, but then also time decay while you waited for it to continue back down. So a lot of
and
these options you got to jump in and out of.
remember, this is a weekly time frame, so this is like this chopped up from January 17th to April 24th. So yeah, if you had puts, you would have been annihilated right here on those puts. So the best thing to do is just to chart this out and come up with a trade thesis. Now you guys can see. Let me see if I want to redraw that. So I would say that the time frame where this has fallen apart and not given us a decent ascending channel would lead me to believe that we could be looking for one right now. But you also notice that these ascending channels are getting less vertical, and they're starting to straighten out. So we've got it kind of pointing up, and then this next one, it's not pointing up so strong. And then this one's almost flat, and we might find the same thing here. They're getting smaller and smaller to the downside, and they're pointing down. And then one day we'll hit a low here, and we'll get what's called a bearish descending channel, and it'll break upwards, and then we'll get a bullish descending channel, and it'll break upwards, and we'll get another one, and it'll break upwards. Then we'll get a big one. Everybody will get faked out, and all the bears will be destroyed. So that's the future. So, this has already been a master class, my friends. We all have gained an understanding of end phase by spending a little bit of time doing our homework. I pretty much brought everybody into my brain here, and we've gotten right into what I do to chart a stock, and we did it on a stock that I really hadn't even looked at. And so now I feel like I've got more concrete ideas. But I will say, Kenan, that you notice that I had already researched what was wrong with end phase to begin with, and understood how badly they were affected by the interest rate environment. So even before I looked at this chart to confirm my views, or like to, really, I already knew fundamentally that what was wrong with it.
Right.
So let's see what else there is to do here today. We could, I think this is a pretty good overview at the moment. I drew these other lines. Strong support for end phase moving forward would be, down here on this weekly at $60. My opinion right now is that we're going to chop up this zone here, favoring the upside. And I think that it wouldn't shock me if we had one more down hit, taking us all the way back to the swing high of 2020. That's another interesting observation. So if I were writing down and I was preparing a video for you guys, this would be one of the points I would make, is that we are coming back to a lot of stocks. A lot of them are coming back to their 2020 environment. Okay. And here's another one. So we're actually not low enough, because if these stocks are going to come back to their March 2020 low, look at that. That's another thing we should have did, really. So let me adjust this particular one. So that's probably worth noting. So I don't think it'll get this low, but it's worth putting on the chart that we have $60, and then the true 2020 low that is possible with this stock is this low right here, which is 25 bucks. I'm not calling that on this, but I can tell you that let's cover one more thing that would help us answer whether that's possible. I'm going to give it to you guys. So, Josh, how would such a determination be made? How could we know whether or not that's possible? This is what the stock would have to do. And what I like about doing this video, Kenan, is that everything I'm sharing can help people understand my logic in my other videos.
Correct.
So here's what we're looking for, and this is what the stock would have to tell us for us to believe that we're not going to $25. What an incredible question. We need a new swing high, okay? Now, our current swing high is sitting at $115, okay? So let's just circle that for now. That's our current swing high. And so the trend is a series of lower lows. This was the high of all time, so we won't count this one. So this was a swing high, and it came down to, this was such a choppy environment. We'll just call that the swing low, swing low. This was the swing high, and these become, ongoing support and resistances. Okay, this is a pretty strategic one here. I should have drawn this, but it's more in the past. So this is a swing high. Just bear with me, guys. Now we've come down, and this here is a swing high. So now we're in 2023. And so it's pretty important for us to look at the year that we're in. So I'll explain that in a minute. So this is 2023 right there on the right side of that line. And technically, we're going to be looking for a 52-week swing high. Now, we don't have to get it right away, but it's going to be kind of continuing as we roll out in time. So this is January of 2023. So we're not quite there yet. But here's what we're looking for. We're looking for a new high. Okay, so let's just say we bounced here and we don't go down. For us to give this stock any credit of being in an upward trend, it has to exceed $130. Okay, it has to. Otherwise, we have to assume that the trend is bearish. Let me mark this, guys, and make it nice and big. Okay, forgive me for a minute. I got some lag here. All right, so we need to defeat 130. And so I can tell you that the significant resistance here is at 115, but let's just say, let me get rid of this. This is what happened with Amazon. The local 52-week high for Amazon was $147, we'll say. It was $146 and some change. And we came right up to it, right, twice, and it failed to make a new high. So Amazon failed to make a new high. It got rejected beneath its 52-week high. Now that's problematic, because since it failed to make a new high, then it basically tells us that the trend could continue bearishly. I personally believe with Amazon that one of the reasons why I believe that we're not in, that we actually have more upside this year, is I think that Amazon is doing well enough that it is telling me that in this year, or in the first quarter of next year, that we will make a new high. And that kind of gives me this underlining current feeling that we are actually going to do more bullish than people are imagining. So end phase would need to come above 130. It would first find rejection at 130, no doubt. It would then come back and find support at 115. It would make another shot at 130, would likely break through, find strong resistance at 150, it looks like, get rejected there, come back, and this would then have to be support. So it would largely, I guarantee you that this is what you would find. You remember when I identified the breakdown over here that was followed up by this massive red candle? This is what smart money would, I guarantee you that you would find a massive green candle right there, shooting us up to around 190. And so this would be the confirmation that most patient and strategic investors would look for a confirmation that end phase had a true reversal. They would
Wait,
not.
patient and strategic. You mean this isn't going to happen tomorrow?
Based on my drawings, best case scenario, I mean, all joking aside, based on this drawing, which I'm not saying is perfect, best case scenario for time wise would be between May and July of next year for a breakout move to 190. Think about that for a minute. Let that sink in. More than likely, we're going to see chop and indecision in this zone. And more than likely, smart investors are not going to be loading the boat. I mean, small play. I gave you guys a small play that, between Monday and, you got this 80 to 88. That's the best play I see on the table for end phase. After that, there's no going long. There's no buying leap option, call options. I mean, there's no smart investor that would load the boat. They would be guessing, because just as easily as this, comes back up here, we could be going into a long-term phase where it gets worse and worse and worse. We just don't know. Let me comment. Can you put me back on the big screen for a second, Kenan?
Will do. There you go.
Yeah, so basically, we don't know what the interest rate environment's going to be. Some people, I mean, the biggest comparisons that I've personally made to this market and looked at is the stagflation of the 80s. The problems in the 70s led to the stagflation of the 80s. Everybody that I follow, and I'm talking the big boys, the guys I don't even like, the guys like Larry Fink and Jamie Dimon. I don't even like those guys, but I got to listen to what they're saying because they've got a global perspective, a much bigger perspective than me. They're much higher on the mountain, looking over the world and looking over the economy than I am, and all of them are saying higher for longer. Right now, we could end, and here's another. One of the big subject matters of my today video is going to be some things that Larry Fink said about why the markets can't crash and go as low as and be as bearish as some people think. And I'll just give you the answer. It's just there's too much money in the system, and it's not even the money that's been in the system. It's the money that this government and this Fed intend to print. We have got clear signs that the printing machines have just been barely paused, and we're going to be printing $1 trillion a year into this economy. And in that environment, we're going to continue to deal with inflation. It's going to hurt the working class, middle class people, but it's probably going to be bullish for stocks. And we're going to get to a place where people get scared, and we're going to have massive volatility over the next 2 to 3, 4 years. But in general, there's not enough reason for the markets to crash right now because the Fed won't be tough. The fact he's so hawkish in his speech, I think it's a cloak for the fact that truly he can't even be hawkish. He's got to only be hawkish. He's a barker. He's just barking right now because the truth is he knows that he can't keep raising those interest rates because the powers that be won't allow him, and that we are spending maniacs. People that you and I, Kenan, everybody who's voting, they're voting people in. They have no concern about spending, right? That's not a concern of the general public. They got people polarized on all sorts of cultural issues, and none of them revolve around money. And because of it, it doesn't matter whether you put a Republican or a Democrat in, and we're not talking politics because I know in the Stock Squad Discord you'll get kicked. But it doesn't matter who you put in, Kenan, they're all going to keep spending. And because they're going to keep spending, Larry Fink is not a bear. And
Right.
because he's a bear, I've got to be careful about getting too bearish. All right.
You're exactly right. They're never going to stop spending. It's one of those things where it's a self-fulfilling negative prophecy. So
Yep.
think of it like this, everybody. So we're not going to get into the politics, but how the Fed can't lower the spending. Because imagine this. There's going to be people doing protests around the entire country. You guys are defunding the schools, you're defunding the police, you're doing like nobody wants to hear that. So imagine this. Imagine that you started working at McDonald's and then they decided to pay you $500,000 a year to flip burgers, right? And then they tell you, you know what? We overdid it. It's time to walk that back. It's time to walk that back and give
I love
you
the analogy,
give you
Kenan. I
give
love.
you 100,000 a year to flip burgers. You're not going to accept that. Nobody wants to hear that. Nobody's going to, man, that's not fair. They should keep paying you what they should pay you more. That's what they'll tell you. And this is what's happening. The government has overspent on many things, but now you will not get elected. An election is kind of like a popularity contest. You will never win a popularity contest taking things away from people to try to make it make sense. So with that being said, as soon as the Fed can turn on the money printers again, they will. So
Absolutely.
just know that.
Yeah, and then I want to add to what Kenan said, just kind of a dialogue here. McDonald's, was one of the first mega corporations in the United States to say that they wanted to raise salaries for their employees. They wanted to look good. They wanted to get the favor of that. But they also knew that raising the salaries would justify moving to automation and eliminating the majority of the jobs. And so they had a strategy for profit. Guys, stop looking at these companies or these politicians like they care about you.
No.
They're trying to maximize profits. There's a guy sitting at the CEO, and the CEO are sitting there thinking, how can we get the biggest bonus possible this year? And it's by cutting costs, and it's not by giving you more money or you necessarily more value.
Right.
All right, then.
They want to give you the least and get the most. That's how it goes. That's how it
Yeah.
goes. It's funny, but it's not funny.
Well, hey, I wanted to just give a couple thoughts on this end phase. Can we go back to the chart? I'm just going to talk about it real quick here.
Absolutely.
So, I got these drawings up here, guys. I'm going to delete a couple of them. Having given you the analysis of end phase that I gave you, and for us confirming that the trend is bearish, and we will not know if this trend is bullish until we get above 130. So we have to assume that we're going to continue beating up the middle of this trend until we eventually just get lower and lower. We have to assume that. But if we begin to make a higher high, that will give us a signal that it's starting to become interesting. And I just want to point out the things that we would need to see. We would need to see, like you saw back here, when this was chopping up, we're going to look for large candles on the higher time frames like this massive green candle. We see a couple other cluster of large candles here. Even these candles here, obviously these candles here, all these moderately ones, these were showing me that the bulls were in charge, and eventually it led to this, right? And the fact is, if you got in and let's say you DCA'd this entire range, you're DCAing in at 145, and you could potentially have the opportunity of taking profit between 300 and 340. That's 100% gain opportunity. And so there are only big red candles here, guys. That's what I want you guys to remember. So at this point in my years of experience, what you're hearing from me is that now I've done all this charting. I've come up with these opinions. I'm looking for another bearish descending parallel channel somewhere around here. Let me get my charts here, guys. So I'm looking for another ascending bearish channel, channel here. But what I'm also would be needing to see to have a change of opinion, to stop telling all the people that follow me that end phase is crap and they shouldn't be invested and they shouldn't be buying the dip. I would need to see a series of big green candles, an increase in bullish volume. I would need to see green candles with a higher volume on the day. So the average, let's look at that, because I get a ton of questions about daily average volume. So we're gonna look at the key statistics. People probably can't see it on my screen, but I'll point out an arrow. It's right over here, guys. Wait, let me see if I can draw this out. Be patient. Right here in this zone to the right is called key stats. And it shows you that the volume for the other day, the volume that we got this big red candle was 19 million. Now we go right beneath that and we get average volume for 10 days was 7.49 million. So Kenan, the volume that we just got on these two big bearish days was 100% higher than typical volume. And so we need to see some more candles that are green, not one, but we need to see 4 or 5 of them over a 6-month period that are twice the volume of the average to begin to tell us that we might even be setting up for a reversal. So let's go back to the screens and I'm gonna make my final thoughts.
All right.
All right. We are 100% confirmed bearish on end phase. That chart doesn't have a sign of life in it. All that I talked with you about is that we could get a dead cat bounce Monday or Tuesday, potentially back to $88, but the trend is 100% confirmed bearish. And I know deep down in all of your hearts and in your thoughts as you lay on your pillow at night that you know that you've lost money because you haven't respected the trend. You know that you've lost money because you have not respected the trend. And I have too. And you know you would have made more money if you had respected the trend. So I just charted this out. Me and Kenan did it. We've had a great conversation today. We know the trend is bearish. We know there'll be some dead cat bounces, but it would be great if we went out and found some stocks where the trend was currently bullish rather than trying to catch the falling knife on stocks that are clearly bearish, that have a 100% increase to the downside in volume. I can't give them anything better than that, Kenan, today.
No, you're so accurate with that. I'm glad you brought up volume. And the reason I'm glad you brought that up is because volume is the main thing that will confirm any movement. What do I mean
Yes.
by that? If you see the stock going down and the volume is increasing at the same time, that means there are more sellers who are pouring in 100% more than there were previously. So this move is not manipulation. This move is not something funny happening. This move is real. People are selling it at a rate double from the usual volume. And what we're looking at, the weekly chart,
Yeah, we've been looking at the weekly
so
almost
this
the
is a
whole time.
pretty decent time frame too. So this is a long-term trend of the sellers are
Yep.
just literally pouring in, day out. It's not FOMO. They're just selling out of it. So make sure
Kenan,
you're paying
the
attention to
last,
that. So
the
now,
last, yeah, go ahead. I'm sorry.
what'd you say? So now the reverse, like Josh said, you want to see the buyers pouring in at similar velocity. So 100% of the volume compared to those sells or compared to the previous times that we looked at, you want to see that volume increase in green, but you don't want to just see it once. Because that could be a dead cat bounce that could get you that run from about, I want to say, like 81, 82 to like 88 before continuation down.
100%. 100%. I think that was yeah, we're looking, you might get a little bounce on this. We have the indicators. I will say this, this is a pro tip or a pro idea, and it could confuse people, but let me just there's definitely a range of traders in here. So one of the reasons why I think we're going to get a dead cat bounce on end phase, at least to 84 or $88. One of the reasons is we've had 3 strong days of distribution to the downside, and we hit a weekly support, which was that $79. So because of those 2 reasons, 3 strong weeks down with heavy distribution, and because it coincided with strategic weekly support, I then believe will bounce. But this is a unique opportunity where we would see a small window of bullishness simply because of how bad things got. But I think that it would make more sense to pile into puts after we got uh, upwards from here.
Agreed. So Josh, thank you for coming on today. Everyone, we've been on here for an hour. I want you to re-watch this so you can see Josh look at end phase from beginning to end. We started at about, let's call it 12, if not 13 minutes time on this video. So that you can come out, you can have your notebooks, and you can re-watch it. Just go and look at where I posted it on the announcements. It'll always be there. You might have to scroll back after a little while. But again, in the future, we'll do this again, and we'll have more segments. But we're going to leave it here. Thanks for stopping in again, guys. Put a heart in the chat for Josh, and we'll see you in the next one. Take care.
Thank you.